Today is Wednesday, August 24, and this is Tony the Bull Spilotro once again with daily crypto technical analysis. In this update, I wanted to walk the audience through where Bitcoin and other cryptocurrencies might be in their overall market cycle using Elliott Wave Theory and the total cryptocurrency market cap. In Elliott Wave Theory, prices move upward in a 5-wave pattern called a motive wave, where each odd-numbered wave moves with the primary trend. Even-numbered waves correct against the primary trend. These patterns appear on various time frames and are what power primary, secondary, and minor trends. To begin, we are going to look at the recent corrective phase, starting with the late 2021 higher high. Typically, a higher high suggests an uptrend should continue. However, certain Elliott wave corrective patterns can be incredibly deceptive. The corrective phase may or may not be over yet. There are two types of Elliott wave corrective patterns possibly in play. A double 3 complex correction with the nasty zigzag that chopped up the crypto market, or a simple expanded flat correction that isn't finished yet, crushing crypto into dust. The more bullish scenario would be the double 3, which could suggest the correction has completed. Later, we'll also explain why this could indicate that cryptocurrency as an asset class is earlier in its market cycle than most expect. Interestingly, the pattern also would have terminated at two key levels: a former retest of all-time high resistance turned support, and the 0.764 Fibonacci retracement level. Fibonacci retracement and extension levels play a key role in projecting Elliott Wave Theory targets and can help identify what wave the market is in. But more on that in a moment. The more bearish alternative count would be an expanded flat, as noted. The expanded flat has a corrective ABC count, with the C wave acting as 5 separate waves down in an impulse correction against the primary trend. Currently, Bitcoin has only completed waves 1, 2, 3, and could have just completed the 4th wave and is about to start a 5th wave down to the final bottom. Both of these corrective patterns imply that the overall bullish cycle in crypto isn't finished and either a wave 5 or a wave 3 and 5 are left. On the left side of the price chart, we have what appears to be a large time frame triangle. In Elliott Wave Theory, triangles only appear in the wave 4 position in a primary trend. If this is a valid triangle, then the 2020 and 2021 bull market was only the first wave of the final impulse of the overall bull cycle. This count suggests that the current correction is a wave 2 correction and could mean there is a lot left ahead in the bull cycle. If the pattern on the left is not a valid triangle according to Elliott Wave Theory, then there is a higher chance of the current correction being expanded flat in the wave 4 position. Either way, that still means the crypto market has an additional wave 5 to go before the market cycle has finished, but there is no telling where this wave 5 begins. Finally, switching to the daily chart, we will walk you through what might be the start of a bullish impulse. If the market can establish support at the current level and move up, we could have a leading diagonal in play, another bullish Elliott wave pattern. Much like Elliott wave corrective patterns, even bullish patterns can be deceiving. Before you rule out what initially looks like an ascending wedge pattern according to classical chart patterns, breaking down is a clear sign that more downside would be ahead. Let's take a look at the last bullish impulse to see how that one started. That's it for today's episode. If you find Elliott Wave interesting and want to learn more, hit the comments below for a link to a free book and a free trading course from Elliott Wave International featuring some of the world's top analysts. Until next time, this is Tony Spilotro.